Morning, Steve Free in Chicago with the morning grain comments. Today is USDA report day. Not expected to make a lot of changes, but the market is expecting them to raise corn acres, crop, and carryout, and lower U.S. soybean acres, crop, and carryout. As far as markets overnight, everything's lower except the dollar. Again, CPI data tomorrow should show higher inflation year on year, which could increase the chances of the Fed raising rates and the U.S. going into a recession. We still have concerns about China economy, copper making two-year lows, which tends to be the indicator as far as global economy and China economy is. So increased lockdowns in China because of COVID could reduce their import demand. As far as weather is concerned, again, the 2-week forecast here in the U.S. Midwest is warm and dry. Yesterday we saw some unexpected rains in parts of Iowa and Illinois. If you talk to farmers in southern Minnesota, east central Illinois, parts of Indiana, Ohio, they're going to say that they got some rains this past week that's going to help their crops, and they were much needed rains. The USDA estimated the crop 64% good to excellent. That's unchanged from last week, and average is 68. You got 15% of the crop pollinating versus 25 average, and that raises a little bit of concern that if we do go warm and dry, more of the crop will be pollinating and could be susceptible to a final lower yield. We also noted that corn exports are 1937 million bushels, or down 17% from last year. And again, I think the corn market needs a shot in the arm as far as new demand to help support prices. On the bean side, China domestic meal sales remain slow. Their crush margins are declining. Our weekly exports are down 10% from last year, and it's been 6 weeks since the U.S. announced any U.S. soybean sales to China. Although our old crop unshipped commitment and new crop sales are record high. 62% of the crop was rated good to excellent. That's down 1% from last week. And we'll be watching pretty closely these USDA numbers. On the wheat side of things, U.S. wheat exports are starting out down 17% from last year. There has been some rumors of China buying some U.S. spring wheat, maybe some white wheat, and Australia wheat. U.S. soft wheat and hard wheat prices are competitive, but so far the fall U.S. Gulf export capacity may be sold out, and some sellers may be unwilling to sell the crops right now at these price levels. We also note that Russia, Turkey is talking about opening Ukraine export corridors. Again, we doubt that Ukraine will agree to demine, and so this might be something that may not happen. 63% of the winter wheat's harvested. They did raise the spring wheat ratings 4% to 70% good to excellent, but only 44% of the crop is heading versus 81 last year. Early Europe wheat yields are higher than expected, but protein's lower. The same you can say about Russia. Argentina is also someplace that's seeing uncertain political issues. So have a good trading day. USDA report today. Watch the outside market.